Hi students. So in this session, I'm going to explaining the RTP issued by ICI for May 2025 exams. Okay. So coming to the first question, the first question is a case-based scenario. So we have one case-based scenario even in final exams also. Coming to here, Sambhav Limited, a company registered under GST and engaged in manufacturing and e-commerce operations, operates in multiple states across India. The company procures raw material from various suppliers and supplies of finished goods both domestically and internationally. It also acts as an e-commerce operator and facilitating third-party transactions as well, supplying the goods and services on its own account. So through its portal round the clock and during its financial reviews, the management of Sambhav Limited observed the following. Just they explain what they do. So coming to his second one, the company discontinued its operations in state of Assam from 15th December. The online application for cancellation of registration furnished on 5th January, and the registration was suspended from the same day. Further, the order for cancellation of the registration was passed on 2nd February, wherein the registration was cancelled with effective from 31st January. So registration was effective date of cancellation of registration is 31st January, but order has been passed on 2nd February. Okay, and the company paid an amount of 5 lakh along with the tax payable therein to the supplier Rudraksha Enterprises pursuant to the settlement of disputes in December month of current financial year. The company had earlier reversed the ITC relating to the supply received from Rudraksha Enterprises due to the non-payment of consideration and tax payment. The invoice was issued by Rudraksha Enterprises in the month of September of the previous financial year. And the company provided accommodation services to the government agencies of Gujarat registered under GST only in state of Gujarat in its own hotel located in state of Rajasthan. And accommodation services provided for the stay of employees of the government agencies of Gujarat who had to attend the training program organized by central government. The total amount charged by the company for such service was 25 lakhs. And during the month of January, and Dum Dum Limited supplied goods for 75 lakhs through the company's ECO, e-commerce platform. Out of the supplied goods amounting 15 lakh were returned in January. And further, the company also supplied its own product amounting to 20 lakh through the ECO. So, and the amount of hotel accommodation services supplied through ECO portal by the hotel owners not required to obtain registration under GST amounted to 20 lakh for the month of January. Okay, the company also completed a project for the construction of road taxable under GST for government agency on 31st December. The total time taken for completion of the project was more than 13 months. As per the contract signed with such agency, the last transaction of payment of 25% of the total contract value was linked to the date of issue of completion certificate by the government engineer. The completion certificate was issued by the government engineer on 15 January. However, invoice of the first such supply was issued on 5th February and payment was received on 20th February by the company. So these are the scenario we have, and based on that we have to answer. Okay. Then first question: what is the due date for filing the final return in the state of Assam? So generally, the final return will be filed by the party within 3 months. Within 3 months. So from the date of cancellation of registration or date of issue of cancellation order, whichever is later. Whichever is later. Here, the cancellation was in effective from 31st January and the order has been passed on 2nd February. So from the 2nd February, within 3 months, we have to file the final return. So 3 months from the 2nd of February. Okay. Then the answer is C. So the due date for filing the final return is nothing but within 3 months from the later date of cancellation of registration or date of issue of cancellation order, whichever is later. Next, second one. Which of the following statement is correct in relation to the re-availment of input tax credit that had been reversed earlier upon the payment of disputed amount by the company to Draksha Enterprises? And coming to here, and section 16.4 application. As per section 16.4, input tax credit can be claimed by the party on or before 30th November. So what is that? On or before 30th November of succeeding year or date of filing annual return. Date of filing annual return. But this is the last date of claiming the input tax credit. But here the question is asking about the re-availment of input tax credit. Already they reversed that input tax credit, and after that they wanted to reclaim it. In case of re-availment, there is no time limit. In case of claiming of input tax credit, the time limit stated by section 16.4. But in case of re-availment, there is no time limit. So ITC can be re-availed without any time limit after making the payment of disputed amount. So the answer is D. Okay. Next. Sorry. The amount of tax to be deducted at source under GST law by the government agency of Gujarat is. And first of all, this is relating to the TDS. Okay, so TDS should be deducted by the notified person. Should be deducted by the notified person, and among them, one of the notified person is nothing but government agency. And here we have the point. And the company provided accommodation services to the government agency of Gujarat. So here, and where is the supplier first of all? And supplier is relating to what? He is a registered company and engaged in manufacturing and receive of multiple states across. Okay, and okay, so he is providing accommodation services, and which was in his own hotel, which was located in the state of Rajasthan. So supplier in Rajasthan, supplier is in Rajasthan. And the place of supply relating to the hotel services, place of supply is nothing but where the services has been provided, nothing but what? Rajasthan. And recipient is relating to what? Gujarat. Recipient is relating to what? Gujarat. If the recipient is not located in the place of supplier or in place of supply. So, for example, so here, if the supplier and the place of supply both are in same state and the recipient is in another state, so recipient is in another state, remember no TDS is required to be deducted. No TDS is required to be deducted. So even though that party is covered under notified person stated as per section 61, but here the recipient is not having any registration in the place of supply or in the location of the supplier. In the location of the supplier. So no TDS is required to be deducted. Okay. So the answer is nil. The answer is okay. And coming to the fourth one, the amount of tax to be collected at the source by the company under GST law during the January is, and before fourth, and in case of TDS, we have one amendment if you remember. So a registered person supplying a metal scrap to the another registered person, that is also covered under TDS. That is also covered under TDS. Okay. Then coming to here, this is relating to the collection at the source, nothing but TCS. In case of TCS, only one change is there, nothing but rate of collection of tax. So it is nothing but 0.25% for CGST, and in case of IGST, it was 5%. Okay, 0.25% in case of CGST. Previously, it was 0.5% of CGST. And amount of tax generally collected by the ECO, electronic commerce operator. So we have to apply how much amount? 0.25% of CGST and 0.25% of SGST. And total 0.5% is required to be applied. On what? Net taxable supplies. Net taxable supply. Then coming to the ECO, and here is the point we have. In case of ECO, what is the total taxable supplies? They have 75 lakhs. 75 lakh. And out of that goods returned, out of the supply, goods amounting to 15 lakh were returned. So you have to reduce how much amount? 15 lakh. And the remaining amount 16 lakh. And further, in addition to this, the company also supplied its own product amounting to 20 lakh through the ECO. Remember, any product, own products, anything supplied by the ECO through their portal is not forming part of net supplies for the purpose of TCS. Okay, so 60 lakhs into 0.25%. How much amount? 15,000. So 15,000 plus CGS is 15,000 plus SGS. And total amount is how much? 30,000. Understood. So TCS should be collected at a 0.25% of a net value of taxable supplies. So net value of taxable supplies is nothing but total taxable supplies made through the ECO other than their own product minus returns if any. Minus returns if any. So how much? 30,000. So the answer is D. Okay. And what is the last date for issue of invoice in relation to construction road by the company for the last tranche of the payment received? And here the payments are received on installment basis. Then the last date of issue of invoice, correct? The last date of issue of invoice in relation to the construction road, and that is relating to section 31 of the CGST Act 2017. The last date is nothing but before completion of the contract, and here the contract has been completed on 31st December. So we have to issue the invoice on or before 31st December. On or before 31st December. Okay. So the answer is 31st December. Okay. Then coming to the next one. Surya. So that is relating to the case-based scenario. Okay. Next, coming to the sixth one. Surya is engaged in providing a boutique so of banquet of goods and services. It is registered in Jaipur under Jaipur, Rajasthan. It provides the following information in the month of January. Okay. So then first one is organized a business exhibition in Gujarat for so Jignesh Industries registered in Surat, Gujarat. So any services provided by the organizer by way of conducting a business exhibition completely in outside India is exempted. Completely in outside India is exempted. But here it is not performed outside India. So it was performed in India. So this is what taxable. This is what taxable under forward charge mechanism. Under forward charge mechanism. Here the Surya is located in Rajasthan and the supply is made in Gujarat. So it is a interstate supply. So we have to levy what? IGST. We have to levy what? IGST. And second one, provided the accommodation services to the 10 CA students originally from the outside the Rajasthan in a hostel and Surya Homes owned by it. Surya Homes located in Jaipur, Rajasthan. Hostel accommodation charges are 22,000 per student per month. As per the agreement, minimum period of stay of the students in the hostel is 4 months. And this is the new amendment. This is the new amendment. Any accommodation services provided by the hostels or PG or inn or homestays, etc. So are exempted if the accommodation charges are less than or equal to 20,000 per member per month and minimum period of stay there is 90 days. Minimum period of stay is there is 90 days. So here the minimum period of stay was satisfied, but the amount charges collected are more than 22,000. More than 22,000. So this is also what taxable. This is also what taxable. More than 20,000 is the two conditions required to be satisfied. Accommodation charges should be less than or equal to 20,000 per month per member, and minimum stay should be 90 days. So here the minimum stay was satisfied, but the accommodation charges was not satisfied. So that is taxable. But is it a interstate supply or intrastate supply? Even though the person staying there or came from the outside India, but this is a immovable property. In case of immovable property, so the place of supply is nothing but where that immovable property is located. So where it was located in Rajasthan, nothing but it is a intrastate supply. So that is liable for CGST as well as what SGST. CGST as well as SEST. Okay. Next. Third one. Performed the Carnatic music to promote the brand for ready-made garments. So Wrigley garments are registered in Udaipur, Rajasthan. So any classical music or classical dance performed by the party is covered under exemption, but here it is taxable because that party performing the classical dance, nothing but Karnataka dance, but that is meant for promoting the brand. Meant for promoting the brand, even though the consideration collected is less than or equal to 1,50,000, less than or equal 1,50,000. So this is taxable because this party is performing that for promoting what brand, for promoting what brand, and that service, that the performance is made in Rajasthan. So this is nothing but what intra-state supply. So CGST and SGST has been levied. Next, intra-state services provided as a business correspondent of Money Bank, registered in Rajasthan with respect to the accounts in its Jaipur city branch. So here, the business correspondent providing these services to the banks in rural area is exempted. Rural area is exempted. But if it is provided in urban area, that is taxable under forward charge mechanism. In case of urban area, that is taxable under forward charge mechanism. And anyway, if any agency of any agent of business correspondent providing the service to the business correspondent, this is taxable under what RCM. This is taxable under what RCM. And here the point is relating to the services provided in urban area because Jaipur is a city. It is located in urban area. So that is a taxable. This is what taxable under forward charge mechanism. So CGST and SGST have been levied. CGST and SGST have been levied. Okay. And next, rented a commercial property in Jaipur, Rajasthan. So this is also the new amendment. Renting of residential dwelling for residential purpose is exempted. But if any property other than residential property, if it is provided on rental basis, that is a taxable. So to the Ganga Limited, a supplier of the goods and services registered in Jodhpur, Rajasthan. Surya is a director in the Ganga Limited. Surya is a director in Ganga Limited. And first of all, here renting of commercial property is a taxable under forward charge mechanism, but there is a amendment that is covered under reverse charge mechanism when the supplier is a unregistered person, receiver is a registered person. But here the supplier is nothing but what Surya. So he's a registered person. Receiver is also Ganga Limited, it is a registered person. So this is taxable under forward charge mechanism. And one more point we have here is nothing but Surya is a director in Ganga Limited. Surya is a director in Ganga Limited. Then, so whether Surya So whether Surya providing these services as a part of employment agreement, this is exempted. So sorry, this is covered under negative list under Schedule 3 of CGST. If any services provided as a part of the employment agreement. And second one, if the Surya providing these services as a director beyond the employment agreement, as a director beyond the employment agreement, this is taxable, but under what? RCM. That is taxable under what? RCM. But if the Surya and if the director providing any services in his personal capacity, he is not providing the building on rental basis as a director. He is providing the building on rental basis to the company as a general landlord. So in his personal capacity. So this is taxable under forward charge mechanism. Taxable under what? Forward charge mechanism. Okay. So here the last case. So Surya is a director, but he is providing the respected building on rental basis in their personal capacity, not as a director, not as a part of the employment agreement. Okay. So this is also what? Taxable under forward charge mechanism. Okay. Next. And intrastate supply, so it is liable for CGST as well as what? SGST. And sponsored sponsored a business summit organized in Bikaner, Rajasthan by Associated Chamber of the Commerce and paid a sponsorship fee of 5 lakh to the Associated Chamber of the Commerce registered in Jaipur of Rajasthan. And first of all, tell me, is it a outward supply or inward supply? Is it a outward supply or inward supply? So remember, it is a inward supply. We are receiving the services. We are receiving the respected services. So provided, sponsorship services provided by the Associated Chamber of the Commerce. So any sponsorship services provided to a business entity. So recipient is a business entity, and it means body, corporate, and firm. Then that is covered under RCM. If it is an individual, that is covered under forward charge mechanism. So here Surya, it is providing to the Surya. So it is a covered under forward charge mechanism. So, and is it eligible for claiming the ITC or not? Yes, eligible for claiming the ITC. Eligible for claiming the ITC. And next, received the services of transportation of the goods by road from the Sindhu transporter and unregistered person. So remember, here GTA providing the services to Surya. GTA is a unregistered person. Surya is a registered person. If any services provided by GTA unregistered to the registered person, this is covered under what? RCM, reverse charge mechanism. In this case, Surya has to pay the tax to the government as well as that amount can be claimed as ITC. So, it is eligible for claiming ITC. At the same time, on this amount, tax is required to pay to the government. Tax is required to pay to the government if you opt. So how much rate is there? Based on that we will decide. And it taken the cars on rental basis from Ajay Limited, registered in Jodhpur, Rajasthan. If any services provided, if any services we get on rent a car services received. So rent a car services, rent a car services provided to the body corporate, provided to the body corporate covered under RCM. So if rent a car services, body corporate providing the services to the individual. Body corporate providing the services to the individual. This is taxable under forward charge mechanism. This is taxable under forward charge mechanism. And if the any person providing these services to the body corporate by way of rentier car services, this is taxable under reverse charge mechanism. And here we covered it under first case. So taxable under forward because the receive service provider is a Ajay Limited, nothing but body corporate. So forward charge mechanism. So this is eligible for claiming ITC because it is a inward supply. It is a inward supply. And rates of CGST, SGST, IGST are 9%, 9%, 18% respectively for both inward as well as outward supply of goods and services, except for car rental services and services of transportation of goods by GTA, on which rates are 2.5%, 2.5%, and 5% respectively. All amounts given are above are exclusive of taxes wherever applicable. There was no opening balance of ITC. From the above information, so you are required to compute what? The net GST liability payable. Okay, net GST liability payable. Then, so this is the problem we have. We have to calculate net GST liability. And here, two things we have. We are paying the tax under forward charge mechanism as well as under reverse charge mechanism. Okay, if any amount payable on reverse charge mechanism should be paid to the government while making the payment, no ITC will be claimed. No ITC will be claimed. And only while making the payment under forward charge mechanism, we can claim the input tax credit. So remember that point. Okay. So here the value of supply CGST, SGST and IGST. So payable under forward charge mechanism. Payable under forward charge. And coming to the first point. So business exhibitions, organized a business exhibition in Gujarat. In Gujarat. So what is the value of supply? 20 lakh. First of all, is it taxable or not? First, you have to write in this way. So here, any organizer providing these services by way of conducting the business exhibition completely outside India, that is exempted. But here they are performing in India, so that is taxable. And here the supply made in Gujarat, but their supplier is in Rajasthan. So it is a interstate supply. Interstate supply rate is 18%. Interstate supply rate is 18%. So 20 lakhs into 18%. How much amount is that? 3,60,000. IGST 3,60,000 is that. And another one, accommodation services. And here the value is more than 20,000 per month per member, but the stay is there for minimum 90 days is there. But the value is not satisfying, so that's why it is taxable. How much amount? 2,20,000. But it is a intra-state supply. So 2,20,000 into 9%. How much? 19,800. So what is the rates we have? 9%, right? 9% and 9%. So 19,800. Okay. Next. Performed a Carnatic music. Actually, if any classical music is performed, whose where the consideration has been charged less than or equal to 1 lakh 50 is exempted. But here, classical music is performed, but that is meant for promoting the brand. So that is taxable even though consideration is less than 1 lakh 50. So, so classical music performed for promoting the brand. How much amount? 1,45,000. So 1,45,000 into 0.9%, 13,050. Okay, next. And business correspondent. And here the business correspondent providing the services to the banker, but not in rural area. In rural area, that is exempt, but they are provided in urban area, so that is taxable under forward charge mechanism. So business correspondent in urban area. So taxable. How much amount? 1,20,000. So 1,20,000 into 0.9, 10,800. Okay. Next. Rented a commercial property in Jaipur. So any commercial property provided, so that is taxable under forward charge mechanism unless if the supplier is an unregistered person, recipient is a registered person. That is taxable under reverse charge mechanism. But here, so both are the registered persons, so that is taxable under forward charge mechanism. And here, Surya is also the director to the Ganga Limited, but he is providing that service in his personal capacity, so it is taxable. So renting of commercial property in his personal capacity, right? 3 lakhs. So 27, right? 27,000. Next. And so this is a inward supply and covered under RCM, and this is also inward supply. So coming to the forward supply, the total is over. Total output tax. How much amount is there? So 19,800 plus 1350 plus 10,800 plus 27,000, 70,650. 70,650 total. So coming to IGST 3,60. And next. And one more payability we have. Nothing but payable under RCM. Nothing but GTA services received from unregistered person. So how much amount of GTA services we received? 2 lakhs, right? So 2 lakhs. What is the rate? 0.5 plus 0.5. What is the rate? Sorry, 2.5, right? Sorry, 2.5 plus 2.5. So 2 lakhs 5,000. Okay. So 5,000 and 5,000. This is only covered under RCM. But remember, for this payment, no ITC will be claimed. Next, inward. So nothing but input tax credit. Input tax credit. So in case of input tax, first we recorded on GTA services. So how much amount? 5,000, 5,000. If you are paying the amount on reverse charge mechanism, and two things we have to remember, you need to pay to the government, and that amount you paid is eligible for claiming ITC against another payment as a on outward supply. Okay. So next. and sponsorship services. So that is also inwards applied to you. How much amount? 5 lakhs. So 5 lakh, and what is the rate? 9%. So 5 lakhs into 0.09, 45,000, right? Next, 20 a car service received. 20 a car service received. So 1,50,000. So, and here the rate is 1,50,000 into 2.5%. How much? 3750. So 3750. What is the total input tax credit? So 5,000 plus 45,000 plus 3750. 53,750. 53,750. Okay. Then coming to net GST payable. So CGST, SGST and IGST. First we consider output GST under forward charge mechanism. Output GST under forward charge mechanism. What is the output GST? 70650, 70650, right? 3,60,000 is the minus input GST 53,750, 53,750. So net GST payable. So means through what? Cash ledger. Payable through what? Cash ledger. Okay. So 7650 minus 53,750. How much? 16,900. This is the amount payable. Along with that, so payable under RCM is that. So because this amount is not, while making the payment under RCM, no input tax will be claimed, right? So 5,000, 5,000. Total, this is the total tax payable to the government through the cash ledger. Okay, so write the working notes below the problem or as a part of the point also you may write. That is your wish. But remember, the provision is important. You need to write. The reference should be provided at that point. Okay, I hope you understood. So this is the problem we have. So first we write what payable under forward charge mechanism, and the last we note what payable under reverse charge mechanism and input tax credit available and net GST payable. Okay, next. Next, coming to the seventh one. Okay, seventh one. And Mehul Enterprises registered under GST in Uttar Pradesh and a monthly return filer is engaged in making the taxable supplies of goods and services. It furnished the details of its outward supply in Form GSTR1 for the month of January 11th February. On 11th February. However, on 14th February, the accountant of Mehul Enterprises noticed that one invoice issued to Vaishali traders registered in Gujarat for supply of goods of the value 1 lakh taxable at 18%. So pertaining to January has been inadvertently missed to be declared in Form GSTR1 furnished for January. And remember, if any invoice you missed while filing the GSTR1, so can be updated or can be considered in the amendments of the next month or next period written only. That is the previous year, previous provision. But in the recently we have one amendment that is relating to GSTR 1B. So that is clearly stated, and even in the amendments also we discussed. Okay, the amendments also we discussed. So, but here the point is, for example, here for the month of January, GSTR1 filed by the party on 11th February. 11th February. And the party is filing the GSTR 3B. So before filing the GSTR 3B itself, you know the fact. So he has approached you the advice before filing the GSTR 3B. You require to briefly discuss whether Mehul Enterprises can amend the details of outward supply furnished in Form GSTR 1 of January. If such amendment permitted, details of Form GSTR 1 are amended, whether the details of said invoice will be available in Form GSTR 2B of Vaishali Traders for the month of January or not. And here, so if GSTR 1 filed on 11th February, and you missed any invoice, then one option is there after filing the GSTR1 but before filing the GSTR 3B. So in between, you may file one form, nothing but GST or 1A. So the GSTR 1A is must be filed only after filing GSTR1 but before filing GSTR 3B. Second one, GSTR 1A can be filed only for the current period. Only for the current period. In the GSTR 1A, you can't give any amendments or you can't give any rectification relating to the previous periods. Only for the current period. Nothing but while filing the GSTR1, if any mistakes you made or if any omissions you made can be amended through the GSTR 1A. GSTR 1A. So any omissions relating to the previous periods cannot be done through the GSTR 1A, and those can be done only in the amendments columns of GSTR 1 only. Okay, and here, for example, as per the suggestion, you make the amendment in GSTR 1A, and another question is, so as per GSTR 1A, is it auto-populated in GSTR 2A of 2B of the recipient? So that is the next question, right? So whether that party is get that amendments in GSTR 2B? Yes. Yes. So those are auto-populated in Form GSTR 2B of Vaishali traders for the month of January. For the month of January. So, as per the provisions, so a registered person may, after furnishing the details of outward supply of goods or services or both in the form GSTR 1 for a tax period, but before filing the GSTR 3B for the said tax period, at his own option, amend or furnish additional details of outward supply of goods or services or both in GSTR 1A for the said tax period only. So Mehul Enterprises can give that amendment, but on or before filing the GSTR 3B. And another point, the correspondent effect of changes made through GSTR 1A on liability of Mehul Enterprises shall be reflected in Form GSTR 3B of January. And one more point we have. So, if for example here GSTR 1A is amended and as per the GSTR 1A, so after filing the GSTR 1A, so those will be reflected in GSTR 2B of the recipient in the current period. This implies ITC of such supplies declared or amended by the supplies through the GSTR 1A will be available to the recipient in GSTR 2B generated for the next tax period. For the next tax period. So for the month of January, those are available in the month of February, right? And thus the details of missing invoice of Vaishali Limited will be available in GSTR 2B for the month of February. Okay, this is the one. Next. and this is the one of the important amendment. Okay, next coming to the eighth one. Mr. Bindusar is a employee in Galgotia and Sons working at its Mumbai, Maharashtra office. Mr. Bindusar is unregistered under GST law. His family is located in Bareilly, Uttar Pradesh. His son required a laptop for his school project on urgent basis. Therefore, Mr. Bindusar placed an order on Amazon.in, an e-commerce platform for supply of a laptop of latest configuration for his son, which is delivered at his residential address located in Uttar Pradesh. And Mr. Bindusar, while placing the order on e-commerce operator Amazon.in, provides the billing address of his apartment located in Maharashtra. So generally, the place of supply here, the supply made from whom? Supplier and recipient is there. So through we are making the supply through the ECO. So in that case, whether recipient is providing the address. If the recipient address is available, location of the recipient is the place of supply. If the recipient address is not available, location of the supplier is the place of supply. Okay. So here, if the billing address and delivery address both are different. Billing address and delivery address both are different. Then we go with what? Delivery address, and where the respected laptop has been delivered. You require to determine place of supply. So here the place of supply is nothing. This is the new amendment we have. Okay, this is the new amendment we have. And he clearly stated where the address of delivery of the goods recorded on the invoice is different from the billing address of the said unregistered person on the invoice. Then place of supply will be the address of delivery of the goods recorded in the invoice. So where? Nothing but what? Uttar Pradesh, not his apartment address. Okay, next. So this is also relating to one of the important relating to exemptions. And determine taxability or otherwise of the finance following services provided by Indian Railways. And coming to the Indian Railways, and first, any services provided by the Indian Railway by way of transportation of the passengers other than first class and AC coach. First class and AC coach are taxable, but other class is exempted. Other class is exempted. And new amendment is there. So services provided by Indian Railway by way of clock room, waiting room, and by sale of platform tickets, by sale of what? Platform tickets, etc. These are all what? Exempted. These are all what? Exempted. And third one, services provided by one religion to the another region of the railways. Those are also exempted. And here, the clock room services provided to the passenger exempted. Transportation of passenger in second class. First class and AC only taxable, but second class is exempted. And platform tickets exempted. And renting of warehouse. Renting is not covered under exemption list, so this is taxable. And under what? Forward charge mechanism. And forward charge mechanism, not under reverse charge mechanism. We have that is liable under what? Forward charge mechanism. And sale of transportation of the passengers in air conditioned coach, AC coach, is taxable under forward charge. General law relating to the Indian Railway services, those are taxable under forward charge mechanism only. Service of transportation of the relief material. So Relief material, if anything transported relating to the victim, is exempted. And food item, if any transported, that is exempted. Relief material transported, defense equipment transported, military related defense equipment transported, that is exempted. And agriculture produce transported, that is exempted. Organic manure is also exempted. Chemical manure is taxable, but organic manure is exempted. Okay. So these are the things. Only 4 and 5 are taxable. The two under what? Forward charge mechanism. This is one of the new amendment, and these 2 points are the new amendments. Okay. Next. And Mr. Hruday Hridya has obtained voluntary registration under GST law in the state of Madhya Pradesh in January, but has not commenced the business till the month of September. Actually, they get what registration in the month of January, but they didn't start the business in the up to the September month. That means January, so it means February, March, April, May, June, July, August. That means after 7 months they started. But if any person got the registration voluntarily, they have to start or commence the business in 6 months. Otherwise, on suo moto basis, proper officer can send the notice of cancellation of such registration. So in the October, the proper officer issue the show cause notice to him for cancellation of the registration. So is it correct or wrong? Yes, that is allowed as per law. You are required to examine whether the action taken by proper officer is justified in law. Yes. Also list the other circumstances when the proper officer can cancel. What are the other circumstances? First, if any person got the registration voluntarily, they have to commence the business in 6 months. Otherwise, the registration can be cancelled on suo moto basis by issue of show cause notice by the proper officer. Second one, composite dealer who unable to file the returns for 3 consecutive periods, and regular dealer who unable to file the returns for 6 consecutive periods in case of monthly returns. In case of quarterly returns, 2 consecutive periods returns unable to file by the party. And next one, and generally after applying for registration, we have to submit bank details. If you are unable to submit the bank details, then your registration can be cancelled. And next, if you are doing any unlawful activities, if you are doing any unlawful activities, if you are not doing the supply of goods or services from the registered premises, and if you are not issuing the invoices, so these all are the grounds where the proper officer got the right to issue the show cause notice for cancellation of the registration on suo moto basis. Okay. And first of all, voluntary registration, if anything done on voluntary basis, they have to start commence the business in 6 months. So not commenced business in what? 6 months from the date of register. That's the action taken by the proper officer in the justice is justified in law. And what are the grounds we have? And here, in case of composite dealer, unable to file the said returns for how many months? 3 months. In case of regular dealer, monthly return filer, 6 months. And in case of quarterly return filer, 2 tax periods. And voluntary registration who unable to commence the business in 6 months. And registration of obtain means fraud or unlawful activities, anything done by the party. There also. Registered person does not conduct any business from the declared premises or place of the business. From another place is doing the business. A registered person issue the invoices or bills without supply of goods or services in violation of provisions of CGST Act or rules. A registered person violating the provisions of 171 anti-profiting measuring and violates the rule 10A. This is relating to the bank submission of the bank details at the time of registration. A registered person avail input tax credit in violation of the provisions of Section 6. Section 16 is relating to the conditions required to be followed for claiming of input tax credit. And so in relation to GSTR 1A, if any person providing more details, more outward supplies, so that is registered person violating the provisions of Rule 86B and violate the provisions of third and fourth provision to the Rule 23(1). Okay. So these are the grounds we have. These are the major points. First A to E are the major points, and so On suo moto basis, proper officer can issue the cancellation order. Okay. Can issue the show cause notice for cancellation of the registration. Okay, these are the points we have relating to the RTP in relation to GST. And altogether nothing but amendments under this RTP. So first do the amendments. So later move on to the RTP. Then you will get the more clarity because majority of the points in RTP take it from the relating to the amendments. Altogether you can expect around 6 to 10 marks in the final exam. Okay. I hope you guys understood. So thank you and don't forget to like and please share the video. Then it able to reach more number. Okay, so thank you. Bye bye.